What's happening, guys? Thank you guys for tuning in to another Sunday Scan. Hopefully you guys are enjoying it, getting a lot of great feedback. So as usual, if you do a thumbs up and leave a comment, you're in the running for a potential shirt, Momo Traders, or a month of chat. Once a month, we're giving away a month of chat. The other weeks of the month, we are giving away whatever I put my hands on first. So if it's a shirt, if it's a book, whatever the case is. But we've shipped everything out to date as of today, or yesterday rather. So then typically I ship them out once a month. I want to talk about sector trades today. I got a lot of great feedback from two things. One, kind of having that idea at the top of Scan for each week. So just maybe something to talk about, something to think about for the week ahead. And then the second thing was how I started to categorize the Scan. Rather than just a list, what is it that I'm looking for on each of the particular types of names and start to categorize it. Because at the end of the day, you're not going to take every trade. Neither am I. And you also know what type of trader you are, right? So just because I take a trade does not mean that it's something that's going to work for you. And just because you take a trade and you're good at something does not mean that it's going to be in my style. There's a lot of different types of traders, and sometimes I use this as an example. Eric Wood, he might take a trade short while I'm long. I'm thinking that, it's an intraday type of potential breakout, but I agree with him that tomorrow, the next day, it's going to unwind. So while two people can be playing the same type of name, different time frames, shorter time frame, longer time frame, it's all up to you as the trader to kind of determine, what works for you. And that's really the most important piece of trading, because everybody wants the easy way. Everybody wants to just be told what to do, right? Everybody wants to be told buy now, sell now. It's just not the way that it works. That might work for a little while, but then what happens when it stops working? Did you learn anything? Are you just chasing? Are you just being a sheep? And at the end of the day, you need to be able to learn consistency. You need to be able to learn what fits with your personality the best, because it's not what's going to work for, everybody. And, some people prefer shorting. Some people prefer going long. Some people prefer a bigger picture idea. And when I say a big picture idea, I'm not thinking intra-hour. I'm thinking big picture. I'm thinking maybe one day, maybe 3 days, maybe a week. But I'm thinking about looking at the daily chart to get my feedback rather than the intraday small kind of thinking. I'm thinking big. So first and foremost, let's get right into it. The sector trades that I wanted to talk about. We had Ebola. We had swine flu. And even we've got oil names, energy names. We've got biotechs. We've got all these different sectors that heat up. And really the key is to understand when those sectors are heating up. And that what normally may be just a quick pop and a drop is not necessarily going to be that same pop and drop. And so a good example of that that's heating up right now is the coronavirus, right? So while normally NNVC, APT, LAKE, AHPI is a new one. Basically, everybody is going through all the filings to see if they've ever mentioned anything related to a virus. Then all of a sudden, it becomes a potential trade. Now, 99% of these, probably all of them, will end up unwinding and fading to nothing. But in the meantime, Lake and APT were nuts during the Ebola and the swine flu, right? Swine flu, it traded, I don't even remember how many millions of shares, but it went crazy. This was NVAX, actually. And then APT, Lake, and there was another one called, it was VSR, I believe. Understanding that it's not just your normal retail flow. Understanding that there's going to be an underlying bid is very, very important to understanding how these trade. Because one's going to fuel the other, then it's going to fuel the other, NNVC starts to go, and then APT is going to start to go. Because APT goes, Lake goes, and then all the other ones start to kind of help each other. And it's good to have whatever one has the most volume up, as well as the other ones that are trending. because as one starts to rip, there might be an edge there. It might allow you to get in there quickly, be able to take advantage of a move that has not yet happened. So on that note, on Friday, APT I was watching, and I traded it long the last couple of days, and I got long early on Friday, ramped up all day, and I was selling into the strength, as I suggested in the room. I said, it's gone straight up, and it doesn't necessarily mean that it has to pull back, but it's had a big move. So it ended up coming in towards the close. That was something, as I tweeted, and as you'll see, I embedded the tweet, but that was something that I bought aggressively into the close, which I normally wouldn't do. Had it just been a one-off type PR, and it caused it to move, then the play's probably done. But in this case, we're going into the weekend. I mean, I'm willing to roll the dice. I don't even really think it's rolling the dice. I'm willing to bet that there's going to be more of an outbreak. There's going to be more confirmed cases. On a Friday, you have Saturday and Sunday and into Monday to catch a big headline, which obviously it's sad. You don't want it to spread, but at the end of the day, there's a good chance that it is. So if you are long these types of names, you're probably going to catch that bid up. You're probably going to catch that breakout. So that's why I was aggressive on APT into that flush under 580s, 560s, 550s into the close. Now, it ramped up after hours as soon as there was another headline of a confirmed case. And it went up about $1 off the lows there. It was around 650. So I ended up taking some off just because, I essentially loaded it into the flush, kind of anticipating that there was going to be an underlying bid because at the end of the day, it's a sector trade. And so that's really the key, I think, that you have to understand. Now, thinking about that, have those charts up, have the ones that you're most familiar with. If you want to dig in, I always do hashtag know what you own, right? So out of those names, just make sure that you understand which ones have the greatest risk of potentially raising and things like that. And that's what's going to keep you safe. So that's what I want you guys to know about the sector parts of the scan tonight. Kind of understanding what I mean by that, understanding that it's not just this one PR that sends this one company up, but rather understand that you need to be watching and understanding the entire, idea, sector, headlines, everything to really make those decisions, and also where to look for an edge, right? So if something's starting to set up and it's not really moving yet, but one starts to take off, if you can identify a solid risk as this other one takes off, then there's a good chance that this other one's going to bid up as well. So that's kind of what you saw after hours. If you go back, I would suggest going back, look at an NVC, APT, NVAX, even AHPI, ramped up a little bit. But be cautious. The thinner they are, obviously, the more dangerous they are. But, NNVC, they just raised. It's that one I've kind of avoided both the long and the short side after the first short. Just because I don't have a good taste in my mouth in the fact that, I probably would get biased if I started long and I nailed it, and if they raised, I wouldn't be happy about that. So I'd rather trade some of these other ones that potentially have a buyback in place that are potentially profitable. Which if you reverse engineer what I just said, you can figure out which one that is. But with that said, just know what you're trading, have an idea about it, and understand that this is a sector move, not just an individual name. And also remember that, all of these are not technically the answer. They're just moving on momentum, sympathy, and like I said, 99% of them are going to be, worthless in the end for this coronavirus. But it is what it is. They're going to try to put out headlines. They're going to try to get involved in any way they can with what's going on, because it's going to allow them to raise money, get volume in their stock, and it's the unfortunate truth. So And I also hate to cheer for, more of a breakout because these things are going to rip. But at the end of the day, I mean, there is opportunity here. So you just have to kind of understand that, the excitement about breakout and this and that it's not a good thing. But you need to kind of understand how it can lead to a profitable, potentially great trade. And so that's that. What else did I have for notes? Last week I talked about really zoning yourself in, focusing A+ setups, less is more, and all the stuff that I typically say. But I mean, last week was straight up A+s every single day. We had SPCE, which was a monster. We had TNXP. We had GNXP raise. There was a bunch of other ones. And we caught intraday raises. Now, I'm not shorting anticipating a raise, right? I'm shorting because of price action. I'm shorting because I look left on the chart. I'm shorting because there was an identified seller. There's pressure. There's follow through. Sellers every step of the way. When it should rebound, they sit on it. When it should rebound, sit on it. It should rebound, sit on it. And it keeps on going lower, lower, lower highs. That is the reason why I'm shorting, more so than company has no money, they can raise at any time. That thought process will get you in trouble more often than not by saying, they need to raise, so I'll just, I'll leave it on. I'll see what happens. Those are all the famous last words, right? So make sure that when you're shorting something, it's fine to have a fundamental approach. It's fine to know that they can raise. It's fine to know that that is going to be the end game. But especially with sector trades right now, especially with the way momentum is, make sure that the price action agrees with your thesis. And with that, provided quite a few opportunities this week. So, other than that, so SPCE was an A+ move for me. That was one that we were prepared for. I talked about it in the room a lot about not pre-exhausting yourself. Pre-exhaustion, in my opinion, and what I mean by that, is every single day you're trying to find the top, right? You get short and it fades off. You're like, yes, got it. And then it ramps back up. And you're like, oh, I just spent all day and it wasn't even breaking down. And now you're exhausted from the day. Next day, do the same thing. It starts to pull back, you start to size in, you stay in, it's flatline all day. And 2-3 hours later, you're like, oh, another day. I just exhausted my entire day. I just wasted all this time. That's exhausting yourself. It's just like RAD. RAD, I was kind of trying to find the top on. Not that I had any bad trades on it. And CLVS, same thing. Not that it was a bad trade or anything like that. It was just I had so many good trades, but I kind of turned a blind eye to the fact that I was up $2 a share on it, but it was still the front side, right? So, I nail it, flushes out, I'm starting to scale in, I'm looking for this huge trade, and I'm ignoring the fact that it's kind of stepping back up, right? So that was kind of the same thing with SPCE. Realize and understand that there's a good chance it's going to continually get saved. And if it continually gets saved, then you want to be cautious and wait for that day that it finally flushes out. And what I was really happy with, you can go back and check the charts and stuff, but the covers was where I was really happy because I had trouble with RAD, and CLVS where I was on that right side, up huge, and I just went into kind of let's see what it does mode, and I watched it bounce, a buck 50 in my face. And again, not necessarily turning into a loser, but just missing huge opportunity, minimizing that trade. So I didn't do that with SPCE, and I was really happy with it. Came to the market prepared every single day and did exactly what I planned to do. So this week, TNXP, main watches section. TNXP, the higher the better. So, we had about 15 million shares or so traded. Here we go. Put this up. So, I posted my chart as well. Pretty aggressive trade for me. I did not actually size beyond half until, this backside over here. Right over here where it finally unwound. And a lot of that was I was hoping that it would keep on going and going and going. 2 over and under. There was a lot of resistance. If you look back at the daily, you just go right over here. You could see that there was a ton of resistance at 218. You go back to this day, and there's 35 million shares. There's probably going to be a lot of resistance even at 172. So with that said, you got to be cautious, right? Because the news was ridiculous. Ridiculous news brings in confident shorts. So no matter how confident I was, I still needed to be cautious and be aware. So in my opinion, I was kind of waiting 2 over and under as sort of I'll go up to about half size aggressively, and then I'll hit it when it's time. And that's exactly what I did. And I was testing it along the way to kind of see how much buying was coming in on the offers and whatnot, because as you guys know, or may not know, but I do test out the bids and the offers at times, just to kind of see how long it takes me to fill. Because if there's no competition on the offer, that there's a lot of buyers. There's a lot of buyers coming into that. If I'm on the offers and I'm not filling, then there's a lot of competition on the offers. So you get a little bit of an idea of what's going on by testing liquidity. So that's exactly what I did. And I had a great average. I had some over 2s, 190s, and then ended up really scaling in. So I think that there's going to be a lot of overhead resistance on this thing. I think it probably gaps down, but I'm hopeful that it doesn't. And if it gaps up, maybe 165, 175, some type of morning ramp, and then I'm just looking to quietly kind of join the trend back down. SPCE, I want to be cautious of getting too biased and trying to force a trade here. The A plus move, the big volume, we had 20, 30 million shares. We had that move. So now we need to kind of let it reset up. We don't want to force the trade. Otherwise, we're going to exhaust ourselves again. And so I would compare this to SDC. And if you guys remember SDC, we had a great move over here. We had another great move over here. So now we're in a little bit of a consolidation pattern, and we just got to chill out. Let's wait for it to set up. If I'm going to join this trend, it's going to be a 9:45, 10 a.m. type trend join until it proves, itself, and I can start to scale in. Otherwise, I'm going to wait for an A plus type setup to happen, and it's not doing that yet. So likewise with SPCE, A plus setups happened. Now we wait. They flushed everybody out. You can see that on the daily candle. They flushed everybody out down to the 1620, 1630, something like that. It's possible we go back down to 1570s if it wants, but in a perfect world, we gap up, and ideally we get back up to maybe the 17. I guess this is 1760s or so. So ideally 1740, 1760s, something like that. I wrote in scan 1750s. And let's see where it goes from there. With that, MAXR, all these space ones. This is one that we had on scan all week. Great unwind, and it took a little while, and then all of a sudden they just pulled the bid. So very nice 80 cents per share unwind there if you were prepared for it. Looking back, VWAP, you can see trouble at VWAP. This is what I talk about, right? Joining a trend versus VWAP. So I don't want to be trying to pick, the top when it's over VWAP. I want to let it kind of come in, fail, and then I can scale with whatever size I'm comfortable with versus that VWAP level, over and under. I never do a hard stop, right? I want to see it kind of come back. It might need to push through, consolidate, fade. So that was another chart that we've been ready for and unwinding. So higher the better there. Ideally it comes back up 1930s, 1950s, and then fades off. Momo, another one. The trouble with this one is you can see the moves are like right off the open. So either you get it or you don't. But there are good trend joins versus VWAP later on. So in a situation like this, the days that I would trade it is if it gaps up and it ramps into the prior day's VWAP, or it starts to have trouble with a whole or half dollar mark, something that I can kind of risk off from there. One thing to note on these: Momo, JD, HUYA, IQ, all these Chinese names. Don't try to find the bottom, and just make sure that you're joining trend. Reactive trades is fine as long as you treat them as a reactive trade. And what that means is you came in with a plan, you wanted to pop, you wanted to wash, whatever it may be, you reacted to that. And then your exit is, if you're shorting the rip, you're expecting to pull right back. So make sure you're locking into that. And if it doesn't do it, make sure you're locking, getting out. And the same thing if you trade the opposite side. KPTI has been great. This one's been basically a failed follow through type of idea for the last couple days in the room. Higher the better, and using that VWAP as sort of a guide. You can see how that worked on Friday. And same thing. Look for this kind of tabletop formation here. Look for where the support comes in. You can see over here at 1770s. You can see the top here at 1790s. And then when it breaks under that, it gives you a little bit of an edge and risk accordingly. Sector plays, I already went over verbally here. AHPI, very, very thin. So this is definitely a possibility. It ramped up pretty fast. I shorted it on Friday, covered into the close, but it's thin enough that if these other ones start to go, it could definitely go. What I want to look for is relative weakness versus the peers. So if all these virus names are ripping, big gaps and going, and this one starts to kind of taper off and fade off, then something's wrong. That they're taking advantage of that. That there's somebody in there leaning, using this opportunity to sell. And it might be... It might be kind of a tell on what's to come. So I always look at relative weakness or relative strength versus the peers or the sector. So this is one that I would be looking for that. NVAX I would consider one of the top ones that most people look at. Obviously NNVC is going to have most people's eyes just because of the volume, just because of the range, the percentages, all that kind of stuff. Everybody gets all excited about that. And it's thin. Even with the raise that they did, it's still, a relatively thin name. So, all of that in mind, I think that you need to have up NNVC and NVAX for sure, those two. And then, if APT does, as, I'm hopeful, then we're going to potentially have another trade on Lake, LAKE. And I actually didn't put Lake. Maybe I'll put it on after. But BPMX was another one for those of you guys that like sub-dollar type names. So again, this is a sector type trade where they might all fuel each other. If they do start to fuel each other, just that's how I'm looking to trade them. So watch dips. You don't need to buy breakouts. I would definitely not be buying breakouts. Same thing I said on APT on Friday when it was strong. Make sure you're selling, right? Your edge is going to be buying, on the flushes when nobody wants. But overall trend is holding. Secondary watches, Trill, TRIL. This one's a pretty nice one. They never let shorts out on this. Shorts have been popped from the first day. When it went over the threes over here, they never let really anybody out under that 280 level. It did. Yes, it did print, but you got to think about. It might have printed, but did everybody just cover under that price? No, it's all about volume, right? So, I think a lot of people were really bent up. They did a really solid raise. Considering it was just 30 cents, they raised at 275. Here we are, we're ripping again. So I think a lot of people might short based off of the offering price and it's just 350 and they raised 275. It's got to be a short. Not always the case. You gotta take into account, they raised more than the market cap. Did they have warrants, this and that, all these different things. Who was behind it? It wasn't the normal guys that you see on some of these small caps, right? So, in order for you to be, we had this conversation in the Traders Lounge, right? So, in order for you to be taking a short based off an offering, I think a lot of people make mistakes by, they had an offering, so that must be negative. So it's a short. And I think that's a big confusion for a lot of people because they take this new knowledge that, well, this one had an offering and went down 60%, so that must be bad for TRIL. I think that's a bad kind of way of thinking about it. I think that if you don't understand, if you don't have any data between what is a good bank that might be raising and what is horrible ones, warrants, all that kind of stuff that might be associated with a particular offering, then I wouldn't place a trade based off of that thesis. I would stick more to the technical side. But with that said, again, I don't think shorts have been let out, and it was a very clean setup. Week open was the goal on Friday for a ramp. We got that. Came back and pretty much put a nice base in there, right around 390s, 4s. Nice ABCD setup, curling up. Busted the 420, 415, 420 level, which was the kind of the top of the ABCD. And then nice trend from there. So for me, if I wanted to trade this, I'd be probably looking for 420, 430s max. Like maybe a fast washout, kind of like this. Fast washout under 430s. I'd want 420s to hold, I think. And then potential 450 to 5. Let it exhaust. And when you forget about this, that's when it's going to be a good short. Okay? So, as long as it's on your radar, it's going to continue to act stronger, I think, than you think. Set price alerts, wait for it, and, at that point, when nobody's looking at it, you're going to have that nice 70-cent pullback day, something like that. MGen was easy to borrow. So it's had 20 million volume, CODX, GMPX, a bunch of other stocks in this range have been doing fairly well on multi-day type runs. I do think, though, that there was a lot of baggies kind of more long side trapped than short side. It ramped up. It offered a couple good trades. I traded this flush versus 90, and as suggested in the room, make sure you're locking in here. Ended up coming back down. I think that it went a little nuts into circuit halts. That gets everybody excited. We've seen ASLN, BNGO, as well as a few others that just go circuit to circuit to circuit to circuit. So as soon as some go into a circuit, people get excited about it, right? But I think that you can see it was pretty much controlled selling, 140s, 130s, 125s, and from that point forward, it always had a lower high. So kind of like the basketball analogy we talk about on Tandem Trader. So with that said, I think that it needs to churn through some bag holder type longs, the ones that were buying the dips on the way down. And maybe Tuesday, Wednesday, maybe even Thursday, we have that buy-in type day because it was super easy to borrow. We may have maybe another PR or something like that, but it fits the bill for a potential ripper again if it wants to. So I'm keeping a radar on it. I will set price alerts for 110, 120, 130, just so I don't lose it off radar. VIR, this is just one that, nice setup here. I probably honestly won't trade it. I'd be looking for dips to join a trend. If I do, it'll be small and just kind of let it work. It's not something that I want to focus much time or energy to. It's more along the lines of if I can buy, a few shares here and there and it just kind of trickles up all day, then great. I look back, I'm up $1 or $2, something like that. Something to work on the side of my other trades. CBLI, unfortunately, I had a bunch of this. Nice float up, 150s, 170s. I don't even know what it's doing after hours, but pretty big breakout. This was an idea that I had posted. It was about 90 cents or so, 88, 90, 95 cents. I noticed the buyer, this should look familiar to everybody. These wicks getting bought up. You can see always a higher low. They also are going for regaining their compliance. Not that it's, a big deal, but they will probably put out a PR, we regained compliance, and that's, I think, in like another 4 or 5 days. if they hold the bid price over $1. And at this point, it looks pretty promising that is going to happen. So not necessarily that it will, but it does look promising at this point, especially if it holds, if it gets up towards the 2s. I really did like this chart, and I was trying to be patient with it, but it gapped up that next day. I asked a couple of my bio guys, as well as kind of looking around, doing my own research, and there wasn't really much of a reason for it to go. So I figured that move all the way up to like 130s was decent, and apparently I should have held it. But at any rate, saw it on scan on Friday. Nice opportunity. Continues to go. So let's watch it. Let's see if it builds. This level is going to be a big level, 140s, 150s. It's over that after hours. So we'll see if it holds. Volume's been good. It's a relatively thin name. Let's see what happens. And last but not least, NEO, LKI, SDC, and GSX, and TWO. And the reason why I went that fast is because that's exactly what I do. I don't need to spend a lot of time. I just want to have them in my head. So I know that if I see them come on scan, I'm already familiar with the chart. And half these names, GSX for example, great trade this week. I wouldn't have seen it if I wasn't paying attention to it, right? It was on scan, and I was saying higher the better, higher the better, higher the better, waiting for it to break down. I don't want to, find the top, etc. So I shorted it the last 2 days. Now Friday I covered way too early, but Thursday, okay trade. But that's the key. The key is kind of keeping them, on radar. NEO had a fabulous trade. I was busy with other ones, but gap up, unwind. So I'm not looking to trade them every day. I'm looking to stay familiar with the charts because I know we're going to have an opportunity. LK, it's been fading since. So they did the offering, they priced it, ripped up, squeezed everybody out, and now it's kind of unwinding. So it's possible that we come all the way back. I mean, realistically, it is possible, and I wouldn't underestimate it. But for me to trade it, I want to see mornings that it gaps up $1, $1.50, and then it fails, and I want to join that to go red. I had on scan for last week, all week last week, that I was thinking that we're going sub 5. So a couple good red days in a row. At this point, I think this was a huge win for a lot of people, but it was up on air, and a lot of people bought the dip. A lot of people averaged down. A lot of people bought right here because why wouldn't you? It was just 26, and now it's 6. It's going to rebound. It goes to 7. Everybody's stuck in this thing. Everybody is stuck. So I would not. I would be surprised if it rips. But I see every gap as an opportunity for potential pressure to come in, and at some point, funds and a bunch of others are just going to be unwinding their position and moving on, in my opinion. SDC, same thing we talked about with SPCE. I want to stay familiar. You can see that every time it kind of comes back up, it's hitting a seller. So 14 level, there's a seller. 1380s level, there's a seller. So I don't need to be, hero trade it and get in there at 9:31 a.m. But if there's an outlier range day, if there's outlier volume day, if it's the day that it gaps down 50 cents, maybe it's the day that it pulls back $2. But all of this is a squeeze. It's a heavily shorted name. The Walmart PR as well as some other stuff. I mean, it's a huge market cap still. So very easily can unwind back down and fill these gaps once the squeeze kind of settles a little bit. GSX I went over, and TWOU, I had been watching this one since here, the 25s, actually since this day, and I'm just staying familiar with it. So I actually joined the trend Friday short just because I'm familiar with the name. And so I'm basically looking for potential gap fill over here, potential unwind another buck or two. Higher the better, but liquidity kind of seems like it's shifted, right? Most of you guys probably remember this day. But nice little squeeze, earnings, I think at some point, I think probably was this day. So for now, it's starting to looks like it found a seller again, basically. So we'll see what happens. But just staying familiar with those. Very nice opportunities. APT, I do have a position, as I noted, from Friday into the wash. So basically, I was pretty aggressive in this area. And then it came up to 650s, and I was selling at 650s. Maybe it opens at 750s. I don't know. There's a lot more headlines. Now it's in LA. So, we'll see what happens with that. So, I should probably pick, let's see. Mike H. Is the t-shirt winner for this week. Again, thank you guys for leaving comments. Put a thumbs up on the video if you wouldn't mind. Feel free to continue to leave questions if you have them about things that I say or the room. As I've said before, I don't know what makes sense to you, what doesn't, and if certain things that I say are like aha moments, I want to know, because then I can kind of focus in and even help my own members with things that are those big aha moments for you guys. So that's about it, guys. Thank you guys for tuning in, and we'll see you in the chat room tomorrow.